couple things. One, we often get thrown into kind of that crowdfunding label, right? And I think crowdfunding has been a phenomenal tool for a lot of industries, and real estate is one of them. There's a couple distinctions of why we're different than a crowdfunding site. The first distinction is we do have discretionary capital. So what does that mean? It means that, look, we take down deals, we have funds, and we have a balance sheet from a high net worth family office actually that allows us to take down the deal. We put a portion of it into our fund. It's generally around 70 to 80% of every equity check we stroke on a deal goes into a fund. And then the other, call it 20, 30%, we tend to put on our platform and what we call deal by deal investing. So we allow investors to come to our platform and invest post transaction. So, we'll tell the seller, we'll tell our operating partner, look, if we pass through our investment committee, and we commit to a deal, we have the capital to put it out, as opposed to being a best efforts type of situation at some of these other crowdfunding sites, where it's much more akin to a best efforts, investment banking type of IPO, where, if they can raise the capital, great. If not, then that leaves a little bit of a hole for that operator. The second distinction is that we actively asset manage these deals, and we're in the joint venture. So when we do a joint venture, when we do a deal with an operator, we're going to put together a joint venture document where Cadre maintains the major decision rights and actively asset manages the deal from acquisition to sale. Where some of these crowdfunding sites are more about placing the investor with the operator, and then acting more like a placement agent than an investor, so to speak, in that scenario. So those are a little bit differentiated, Roger. So, but when you go on our site, to your point, we have basically really two funds that we're raising. One of which is called a Horizon Fund, which we will be registering most likely this year. And that will be one that hopefully once we register will be available to all investors, including non-accredited investors. Right now, if you're an accredited investor, you can come to our platform and you can either invest in the Horizon Fund, which is more of a core plus, longer dated, a little bit lower yielding, a little bit lower on the risk spectrum type of a vehicle. Tend to hold things 5 to 10 years in that fund, targeting more like 8 to 12% return over that longer duration. Or we have what we call our Cadre Direct Access Fund. We're going to be launching our second vehicle in the near term, which will be more of a value add fund structure. It'll be more 3 to 5 year type holds, where we're using capital to really push the top line revenue of these assets. But that risk profile is a little higher, where we're going to be targeting more 14% and higher returns. So those are two funds where if you're an accredited investor today, you can go on to Cadre, you can either invest directly into the fund, or to your point, Roger, we do have what we call deal by deal, where we have some single asset deals and opportunities there for investors to kind of log on and take a look at the merits of those investments and decide if those assets make sense for them, and invest, to your point, as little as $10,000 into each of those specific deals.